Assalamu alaikum, everyone. While I'm setting up my IT, thank you to Shakil Saab, giving us such a good start, and Hasib Saab earlier. Listening to Shakil Saab's presentation, it did make me a bit nervous because the things I'm going to show you on my slides may end up infringing few copyrights. So I'm not sure I should, but full disclosure, I've taken few images from a very nice publication, Private Eye. So I think they're public property for now. So let me just. Apologies. I know we have wasted a lot of time earlier, taking the liberty. Can you see the other screen? Sorry, on. It's there. Okay. Let me just maximize it. Good. Right. So I was saying, Shakil Saab, no offense, but I should have got him to sign an NDA for me. Take your time to go through this if you can read it. Once you get the joke, I can move on. So can you see? Okay, you can see it. Yeah, that's fine. Okay, right, back to my presentation. So, of course, Jahangir Saab gave me the title of my presentation, How to Raise Capital, and I came up with a little variation. I'm actually trying to see how to find capital. And this is the theme that I'll be going through the rest of my presentation, what capital we can find within ourselves. It is not how, capital isn't just money. It is everything you already have and you can create value from. And your journey and my journey, it starts with when we discover our own capital within the business sense. As I said, capital is not just money. So can audience tell me some other examples what capital could be? What capital we can find within ourselves. Anyone? Okay, I can move on. Experience, yes, of course. Exactly. Absolutely. Any other ideas? Yes, indeed. So on each of the following slides I'll be sharing with you, you will be able to spot a capital item because I've colored it red, so it's very simple. We often think that starting a business needs a lot of money, but what if your first investor is you? So with your own capital, everyone can start with some form of business. So as audience said, it's time, knowledge, creativity, energy, grit. So we all need to think about what we already have that someone else might invest in. The bootstrap hustle. So the hustle phase where you wear every hat. You are your accountant, you're your admin assistant, you're your receptionist. So bootstrap capital is your energy, your evenings, your resourcefulness. Every founder starts here creating something, nothing, out of nothing. Then there's crowdfunding shares. This is when your idea starts to gain believers. People don't just back products, they back stories. If you can inspire strangers, you already have a social capital. Pitching to angels. So angel investors invest in you, not just your slide deck. And authenticity and clarity are your credibility capital. Be prepared to answer why you, why now. University spin out. So innovation often, like Shakil Saab's background in electronic engineering. So it comes from your classroom and labs. Academic capital helps you to turn knowledge into enterprise. And the biggest leap isn't technology, it's the mindset shift from research to real-world impact. Government grants are free money, but it is buried in paperwork. So it requires a bit of hard work. Grant teach you discipline and clarity, and you must articulate your value. And remember, it's not just money, it's validation. So even if you don't get much money, your idea is validated by getting a successful grant. Startup competitions is another way of getting some money. You build your brand, not just your bank. Gives you visibility and confidence, which is both important capitals. Although winning is a nice thing, but showing up for competition is also very important. We need to find strategic partnerships. So partnerships double your reach and half your risk. Sometimes your best investor is another founder, and it gives you shared capital, resources, network, credibility, and builds momentum. Community funding is another good source of capital. Your community is your capital. So people love to help those they see trying. Look in our community, the effort we are making today is one of the ways we are trying to build that capital. Your local supporters are your earliest ambassadors. Always give your community something to believe in. Let's see if I can say this word properly. Accelerator Life, yes. Offers mentorship, structure, and networks, all capitals. The best accelerator don't just grow your business, they grow you. And yes, they will make you pivot 10 times with different ideas and suggestions. Creative financing, when your money is tight, creativity becomes your capital. Every act of barter, favor, or collaboration is a lesson in value creation. If you can trade pizza for progress, you're already an enterprise. So from all those slides, that's the summary. All traits, all capabilities, all resources we have is our capital. Don't just think in terms of cash. So in summary, you are your own first investor. The most powerful capital is your belief and persistence. And before you ask for money, now what you are bringing to the table. Investors don't just fund ideas, they fund momentum. I was asked to give a brief summary of my firm, what we do, and how I got there. So CapShire is what I represent as partner. And that's the journey of last 15 years. After leaving KPMG, I started my own firm. And the idea was to compete with the likes of KPMGs and PwCs of this world. And I'm glad and proud to say that today we are working alongside those firms with common clients. So that's quite a rewarding experience in the last 15 years. And in those 15 years, this is all the capital I've used. All the things we talked about earlier. But the most important of all these are the prayers. Your parents, your family, and your own prayers. It's a call to action. So find your undiscovered capital. We all have much more than just 3 things. I was supposed to speak for 20 minutes, I think, but I'm running out.
That's okay.
So that's much more efficient. So I got a few more slides to share without any copyright issues. So if we are desperate, something to present, there's another one. Intellect. And finally, some nice ideas. So the real important thing is to put your ideas to action. Jazakallah. Any questions?
Sorry.
Oh, great.
No, so just one thing that has come in my view of recently about financing is things like seller financing as well. Seller financing. Could you just elaborate on whether that's something that you've seen in action and whether you recommend that approach as well?
Sorry, which finance?
Seller financing.
Seller,
as in it's usually used when somebody is acquiring a business and they use the business's profits effectively to pay off the purchase of a business.
Okay. Well, but this is something different. This is seller finance, you're saying?
Yeah.
So seller is financing the buyer. That's what you're referring to. So seller business is financing the buyer. I haven't come across, but it looks quite strange. Why would a seller give up their business for nothing? Yeah, it'd be good to know more about exact example if you have, please.
Yeah, Noor, one is a comment on seller-based financing. Sometimes as a startup company, your clients really value you, but you don't have the funds to deliver those kind of goods. You don't have the financing for that. Sometimes the buyer itself give you, let's say, 50% advance, 100% advance, and they would say you take the advance, but charge me lower margins.
Okay.
So this is the kind of things I've seen happening even with ourselves.
So I know this is happening with NVIDIA. So, sorry, not NVIDIA, ChatGPT. NVIDIA has an interest in ChatGPT, and so they are buyer and seller at the same time. They're investors, so there are circular relationships in those deals that they are doing. And Jahangir Saab example, yes, that can be structured, but we need to look at transfer pricing issues, if there are any of those that come up. That's to do purely with taxation. But I really would like to see a real-life example of where it is applied and how a seller benefited. Of course, you can give up some of your equity to your customer because your business depends on your customers. And your customers, vice versa, they are relying on your product. So they're interested to keep you afloat. And thereby, they are happy to take a stake because they do see there's a benefit in your business, yes.
I can give an example. So we had a customer that said, we're going to give you $10 million business. You have the agency to provide the goods, and we cannot buy it directly. So we'll give you 100% advance, but bring your margins from 10% to 5%.
Yeah.
I mean, a simple example where both parties
Yeah.
benefit. I, as a small company, I don't have that capital, that financing to do that, and the buyer is getting direct benefit without
Yeah.
me giving them any stake in our business. But it's a commercial benefit.
Yes, that's right.
The other is just a comment, or I think a note, is small businesses, once they enter their own business, how should they maintain their financial statements? Why should they submit their, record the financials so that they can build their history?
Yeah.
Because after 2-3 years of running a business, when they're really about to scale, they go to a bank says them, you're not fundable because you don't have the right, financial statements, you don't have a good auditor, and also some mistakes of not filing the accounts in time. Very small things, but they take you away, number of years away from being fundable. So if you could, I think, advise or give some feedback on that what are the top 3 practices, even day one you get into business, you must do to make yourself financially credible for the institutions.
So as one of my slides alluded to, most of the entrepreneurs, they are bootstrapped. So limited resources, and they are all focused on just getting the product right. And the supporting services, finance, customer service, and other things, they come secondary to them. And they don't have the capacity or willingness to invest in those things. And finance is fundamental because you can manage a small business because every transaction is going in front of your eye. But as it expands, you need to have a credible system that can give you proper health check of your business. So a good, healthy business, before it's too late to find out, so those symptoms should be visible, and that's only possible if you have proper management reporting. So the moment small businesses, they find, realizing that now they don't know what they made today, how much profit or loss they have made on a daily basis, that's the time then they need some help. They should have a proper system. And now it's not very expensive. The technology has made bookkeeping quite simplified. So most of the application can be managed by the business owner themselves. Outsourcing is very cheap. But proper reporting and financial health check is very important from the beginning. And you never know when you may find an interested party willing to invest in your business. And that's the time when you don't have proper record. And I'm actually currently looking at a very successful dental practice. For 4 or 5 years, over 10 dentists in their practice. The accounting records were not kept properly. It's a successful business, but they want to exit. We can't present it to any investor because the numbers are not credible. So investors are losing money, some others are losing patience, but that shows a small thing which could have been managed much more earlier at much less cost is not costing much more, wasting time as well, and you may lose investors' interest in due course. Oh, yes.
Yeah, assalamu alaikum. So I'm currently going through the rigmaroles of funding rounds and having discussions with angel investors and VCs, etc. What I found is that in the UK, there seems to be a ceiling limit of available funds for like a pre-seed company. And so the question I have is, if I went abroad, say for example to the US, the raise for a particular fund is in its millions, whereas here it's around about $500,000 effectively for a pre-seed company. And since the time and constraints of raising takes so much time, what would be your advice for such type of pre-seed company raise?
But you could go, if you think you can get more money from US capital markets, and that's we have seen in recent years with the London Stock Exchange. Companies are not listing here because they feel much more comfortable with American markets. There's more capital obviously there. For pre-seed companies, yes, you can go there, but where is your customer base? So your operations are UK. Are your investors willing to take country risk, especially with Ukraine war, Brexit, and everything else? So of course, need to explore with the investors, and they have much more data, and they can look at their specific interest. Yes, they have more money, so they can invest more. UK doesn't have that much liquidity, unfortunately.
Assalamualaikum.
Yes.
Yeah, Noor Sahib, this is an interesting topic. With regards to funding, what I've noticed is that some companies, regardless of having a good product or a service, they manage to raise millions. How do they manage to do that when there's not a real, like, even a business behind it?
I'm as surprised as you are. I'll give an example. You all have seen, might have tasted Wingstop. Yeah? Kids like it a lot. If you don't know, it was sold last year for 460 million in UK, just UK. 65 branches. Started, because I know the guy who started, so in 2017, he started with just one branch, and he then worked hard, went to different investors, found the 10th person who was willing to back him, and they had a good growth plan. So they went to all new developments, every city they could go to, and within 7-8 years, grown the brand to 67. It's quite established in US, but it was new to UK. 67 branches. If you pick up their last year accounts, it had losses, but still, Goldman, I think it was Goldman, valued it at 450 million. It's because apparently there's too much interest from, and the buyer was a venture capitalist, American venture, because they think there's a potential for growth. Domino was also interested. So I think the valuations currently, especially in the IT sector, they are not purely based on profitability. If you look at ChatGPT, it got $500 million valuation before it could get to a $500 billion valuation before it could get to a 20 billion turnover. For Amazon's and Google, $500 billion valuation came much more later. I don't have the exact number, but let's say they were turning over 250 billion when they got $500 billion valuation, whereas ChatGPT at 20 billion only. NVIDIA, 5 trillion company, bigger than Germany GDP. So what value is there? God knows. But we are all into, we are heavily invested, yes. I think we are running out of time, so Jazakallah.